Welcome to Subramani. Please subscribe, please hit the bell icon, and please carry the message that I carry to others, right? So that's very important for me. Rather than, of course, I would love it if you pass it on in WhatsApp or whatever form that you want to share it with your friends, cousins, enemies, whoever. But even if you understand the gist and convey this, that is also going to be useful, right? They are going to benefit. So one question which people keep asking me is, can you recommend a good financial advisor? I'm not very keen to do that, because once I recommend a financial advisor, I should be willing to say that everything that he or she says I agree with, and if you do this, you will create wealth. This I find it very difficult with many people, because I have experimented with this. They sell from fund houses which I wouldn't trust and I wouldn't touch with a barge pole. Then I'm worried that you might end up getting into a bigger mess because of a recommendation that I made. So that's a risk that I'm not willing to take ever. Unless I really believe, I put my money, and I can say I put my money in this PMS, I put my money in this AIF, I put money in this mutual fund, whatever. I'm willing to do that. I'm willing to say what I did rather than say what you should do, right? So first of all, let's understand some basics. If you don't understand investing, if you don't want to understand investing, and if you don't want to have a financial advisor, there are still great products available for you. One is an index fund. Go and do your SIP in an index fund. You don't need anybody to tell you which index fund. Just go and put into any big index fund. Maybe UTI has a big index fund, maybe HDFC has a big index fund, doesn't matter. Go put in those schemes, choose the direct option. Your life is done as far as investing is concerned. Take a pure term insurance which is cheapest in your age category, right? Please compare. Don't go and believe, oh, this is cheap for a 25-year-old, so it might be cheap for a 26-year-old. May not be true. They may make illustrations, and just to make illustrations, people keep the insurance cheap for the 25-year-old, 30-year-old and a 35-year-old, and a little more expensive for the 26-year-old or a 28-year-old. Be careful about the marketing gimmicks which keep happening. So you have to take one term insurance, you have to take maybe one index fund to start with, then maybe some disability insurance, and some, if you're a doctor, maybe some malpractice insurance. This is all you need to know about insurance. After that, for the rest of your life, you need not know what is happening in that field, right? You need not know what is whole life insurance and endowment plans. You don't need it. A pure term insurance payable for till you need it, not short payment, not say, oh, pay only for 3 years, for the next 30 years. No, none of that. A regular term insurance premium, preferably payable quarterly, and that's how you take your term insurance. Medical insurance is a little more complicated. I prefer that you go through an agent, simply because making the claims is not going to be very easy. What you sought advice from a doctor in February, but you actually did the operation in September, good chance that the claim will be rejected, saying, oh, you should have done it in February, or some flimsy reason like this, which you and I have no clue. So I still take my medical insurance through a friend. He's given up almost on work, but then I still stick with him, and he understands insurance. To me, that is very important. I don't understand general insurance, medical insurance, car insurance. I just don't understand. So for that, I use him. I use a financial advisor, and I've been using him since 1979. So maybe in 2024-25, when you're watching this video, it's a relationship which has gone right for about 45-50 years. So it is very important to put the advisor. So if you ask me who should be the best advisor, the best advisor is the guy who puts your interest ahead of his. What I would call loosely, in the US it's called the fiduciary test, saying is he interested in the money that you make. Actually, my broker and advisor, he is interested in the brokerage that he makes. Yes, of course, unless he does well for me, I will not give him more money, I will not act with him, but Not even one transaction in 45 years I felt that he did it for his gain and not for my gain. So to me, the brokerage or advisory fees, whatever I pay him, yes, of course he's made money out of me, but I can assure you I've made much more money out of his advice than what he must have made out of me. I mean, it has to be a factor of 100x kind of a thing. So it's okay for me to pay him that much of fees. I think it is necessary for him to make that fees, pay that fees. One thing which all theoreticians tell you is your advisor should be updated on the field. Reasonably, yes, he should be updated, but more important, if he is going to advise you on equity, does he have his ear to the ground? Does he know what is happening? I can just pick up my broker and say, I heard this rumor, can you check? And in 10 minutes, 15 minutes, he'll come back and say that's partially true, that's nonsense, where do you hear all such shit, any of those kind of feedback. But I know that he has got his ear to the ground and he can do it. So to me, that is more important than saying, does he know the latest, how the derivatives are priced and the new asset class, how it is going, what features it is going to have, doesn't really matter. I can do all that myself. I don't expect that from him. But if you expect, make sure that it is a person who is doing some continuing education. CPE courses are available on NISM, that he or she is updating themselves on all this, right? Check out whether you need a meaningful designation. I never wanted a meaningful designation, but today youngsters are looking for a designation, a CA, CFA, BE, MBA. There's an alphabetic soup out there. So you decide what you want as a good advisor. For example, I know advisors who are qualified as MBBS, qualified as ICWA, qualified as CA, qualified as engineer, MBA. All kinds of people exist. So you decide whether you want such a thing. My broker is not, I mean, he did his CA but did not complete, but to me that does not matter. You check out whether you need that thing. You also check out whether his other clients are like you, so that you can ask him or her for advice. If the people to whom he caters is very different from what you are. For example, if you are an employee working and earning X amount of money and all his other clients are doctors or actors or cricketers, etc., he will not appreciate your the ticket size, or saying, oh, I will invest on a monthly basis and things like that. He may not appreciate, or she may not appreciate, she may not know, because they may not be dealing with this. So be careful whether they have similar clients. Then good chance that he can or she can understand what you want, right? Does he have a reasonable investment strategy? My advisor, for example, does not do F&O. Now this is very rare for somebody with 40-45 years experience in the markets and not to do futures and options, but he doesn't do, and it suits me. I don't need him to do any F&O for me, because he says you're free, go and do it elsewhere. So I can always go to some other place and do the F&O in case I want to. He just doesn't do, which suits me. It may not suit many other people, right? But it suits me. I am also like that. Check how unbiased he or she is, and that I don't think has ever been a problem for me. When I talk to somebody from a particular fund house, I know that person is going to be biased towards that fund house. When I talk to somebody from other fund house, he is going to be, or she is going to be biased about that fund house. So that is bound to happen. You're just supposed to know, understand and react to it like that. You cannot say you should not have conflict of interest. There will be conflict of interest. If you as an investor can find out the conflict of interest and find that there is a problem, you act accordingly. Don't say he should not have conflict of interest and he should be unbiased. It's very difficult to be unbiased for a long period of time. So if you ask me, I will be biased towards shares in my portfolio. I like Colgate, Gillette and Procter and Gamble and HUL more than maybe I like Dabur, because Dabur I don't have in my portfolio. So some of these things will happen. There will be bias. There will be bias towards assets which you own. There will be bias against the assets in which your parents lost money and because of which you had to downsize your house. All these things happen. So see whether there is bias and see how you can tackle the bias, rather than say there should be no bias. That's not going to happen. I don't see that happening, right? See whether the services are fairly priced, or if you think that you are anyway making more money being with this financial advisor, then stick to it. See whether he or she has other services to offer. maybe you want to travel, they can offer you travel insurance, maybe a travel card, right? All those things are also possible. Do they have other services which they have tied in? And check out all these things. Check out whether how he has made his money, right? If he has made all his money by keeping money in bank fixed deposits, but and dependent only on trail income, he has never invested his own money, he is not a great person to listen to for equity investing, not even equity investing through mutual funds, because he may or may not know what he is doing, right? So check out all these, see how it works, rather than asking me how to look for a good advisor. These are the ways to look for a good advisor. Why I don't recommend an advisor, I've said that earlier also. I don't know how the person will change after I recommend, so that's scary for me. Thank you.